Okay. Well, anyway, it's a pleasure to be here. My name is Mo Islam. I'm the co-founder of a digital media company called Payload. We're one of the leading media companies in the space industry. We have a daily newsletter, which is now one of the largest trade publications. We have a weekly podcast. We have a growing event and conference series, and at the end of the year, we'll be launching an intelligence product. So a lot of exciting things to come, but it's a pleasure to be here. It's a pleasure to be here at this panel. With great risk comes great reward. We're going to talk a lot about the funding environment in the industry today and how it's going to evolve, I think, over the next couple of years. I'm going to challenge a couple of the things that Mark said today, so I think we'll have a very interesting conversation. I'm not as bullish about what's going on right now, so we'll obviously talk about a lot of that. So with us here today, I know we don't have a lot of time, so I'll just go through very quick introductions. Carie Lemack, to my right, is the co-founder of Z Factor Fellowship, which is helping build a more diverse space industry by engaging with students from underrepresented backgrounds and is a member of the Homeland Security Advisory Council. To her right is Tim Chrisman. He has a few different roles. As a space policy and geopolitics expert for Toffler Associates, he leads the Foundation for the Future nonprofit, the Association for Space Finance, and the space industry practice at Distinctive Edge Partners. And last but not least, to his right is Dr. Alkalai, a retired JPL fellow and the founder of Mandala Space Ventures, a Pasadena-based venture studio focused on the emerging space economy. So just to kind of kick things off, I do want to ask the title question here, and I just want to hear a yes or no answer, because we're going to get into all this, but is there enough funding available for the space industry today? I'll start with you, Carie.
Well, I don't think it's the right question to ask, so I think it comes down to, can you tell the right story to incent investors to invest? And in that case, if you can tell a good story, I think absolutely there is.
Okay.
I'm going to say no.
Okay.
I'm going to say that what I'm observing is consistent with what Mark showed in his charts, that I do not see a slowdown in the early stage investment.
Got it. Okay. And then same question, slightly different twist. Government funding. Is there enough government funding for the space industry today?
Do you want me to start? Well, again, I would say I won't change the question this time. But again, I think it comes back to finding the right public-private partnerships that are available, and I think that the U.S. government is shifting, and I think everyone out in the audience would agree who's applying for grants and different programs that they're seeing changes. And Mike is here.
Mike, how are you? I'll do a quick introduction. Mike is the managing director in the TMT Investment Banking Group at Bank of America, and he focuses on companies within the space industry. The question, Mike, I'm going to put you in the hot seat because you just showed up a little late, is there enough funding available for the space industry today? I just want a quick yes or no kind of answer just to kick things off.
Tough question, but
yes or no? Yes or no?
I changed the question, Mike.
So if you say, is there enough funding for differentiated companies that have the right business plan, that have great milestones, that have strategic backing, then I'd say yes.
Okay.
Is there enough funding for every space company out there today? No.
Okay. So back to my government question. Government funding? Yes.
No.
No?
I think there's plenty.
Great. Okay, Tim, thank you for following the prompt. So Mike, I want to start with you because we just got off of a really interesting conversation from Mark over at Seraphim talking about sort of the different trends that we're seeing in the space industry, and that things seem to be growing, right? Both across seed and later stage. We've done a little bit of work on that, and we've come to a slightly different conclusion, which is I do agree that there's a tremendous amount of seed funding available. Most, especially investors, can look through economic cycles. You're investing in a seed stage company, you're easily 10 plus years away from an exit. So I think people can look beyond what's happening, especially with the Fed and interest rates and all that good stuff. On the later stage, however, what we're witnessing is if you annualize a lot of that data, that it's come down quite significantly. And anecdotally, when a company goes out and raises a $100 million plus round, what used to take a couple months, 3 months, is now taking 9 months, right? And the funding cycle has expanded significantly. So I'm kind of curious, what are you seeing from the, because you're dealing more on the later stage capital formation. Now I do want to say at the same time, there are companies like Mark mentioned, like Axiom and Sierra Space and Stoke that have all raised over $100 million rounds. So there's clearly funding available, but what are you seeing on the later stage side?
Yeah, so great question. It is definitely a more challenging environment than it was in 21. That's just no doubt about it. We're seeing, to your point, processes take much longer to get done. As a matter of fact, we're working on one now, and it's going to go on close to a year, right? So the time frame has significantly expanded. We've seen valuations come in pretty meaningfully as well. We're seeing investors just be a lot more judicious. A ton of folks got burned during the de-SPAC boom. If you look at where all those companies are trading right now, some of them are trading for cents on the dollar. Maybe there's one that's over $1 billion market cap, right? And when they all came out with these very lofty valuations, so clearly it's a completely different environment. And some of the things that we're seeing companies do to kind of help bridge that gap in terms of funding dollars that were there that are no longer there, we're seeing them go towards more international investors, right? So Al Jazeera investing in Axiom. We're seeing, was it MUFG that kind of led the round for Sierra Space? So, we're seeing more of that. We're seeing strategics step in more and more to kind of fill in that gap. Of course, financial investors are saying, hey, is the technology de-risked here, right? And how do you kind of measure that? Part of it is having a very sophisticated strategic investor kind of fill in that gap, right? So I think it's definitely a tougher environment. Rounds are taking longer to get done. The round sizes are getting smaller, valuations getting smaller, and we're seeing international and strategic investors and also insiders come in to kind of fill the funding gap.
Yeah, that's a great point. I'm going to come back to that in a second. Leon, I'll start with you, and we can move from right to left, because I know you three focus more on earlier stage companies and really companies that are at the earliest part of their formation as they're figuring out their business model, as they're figuring out their market demand. What are you seeing on the funding side around kind of like call it seed, Series A, early stage businesses?
Yeah, so what I'm seeing on the funding side is that the funds, the investors are looking more carefully at their investments. They're looking more to find ways of de-risking, understanding the technology, understanding the risks involved. And that's where my studio, Mandala Space Ventures, it really has kind of the deep space tech capabilities to look at a startup company, look deep into their technology source, IP, and then look at the flight projection. Where is this going to go in terms of flight capabilities, risk analysis, and so on. So we're seeing that investors are looking more carefully at their investments and looking for differentiators.
Yeah, and I would agree that due diligence has come back in full force. That 18, 24 months ago, you had a space company and you said, I'm going to be the next SpaceX. People were like, well, just take my money. Now they're like, now investors are very spun up on the inner workings of rocket engines and really want to dig into that. And there's a handful of venture funds, Mandela is one of them, that have had that due diligence this whole time. But we're really seeing LPs ask a lot more questions of these funds in terms of how are you going to validate the tech behind this, which is good. I think we need that as an entire sector.
I mean, I think I would jump in and say, so what I'm hearing is you have smarter investors, right? Asking better, tougher questions. And because of that, you're going to have more impactful companies, right? So they're being forced to answer the questions. So to me, and data has shown, in times where the money is tight, you end up finding the best returns as investors, right? The funds that happen after the dot-com boom had some of the best returns ever, and you get the stronger companies out of it. So maybe I was a Red Sox fan before 2004, so I'm a born optimist. But
I don't know. I'm a Yankees fan.
We'll have that.
We might have an issue here.
Yeah, but I think that it's actually I think that's all really good things. And I think the other thing for us to keep in mind is that we're talking about space companies like they're all the same. And there's obviously launch is different than anything not launch, and anything hardware is going to be different than anything software. So I think there's a lot more we could parse here, but I want to let you ask your other questions.
Thank you. Mike, I do want to get back to one thing you've said, which is interesting, which is obviously there's a lot of foreign investment coming into American companies. There's a lot of implications for national security and CFIUS and a lot of different things that I think companies are wrestling with and thinking about. What do you think is going on the domestic investor side that you have folks like the Koreans, the Japanese, the Saudis backing some of the largest infrastructure businesses today? And then at the same time, you mentioned insiders, which is 100% right. If you actually look at the round construction, a lot of these later stage rounds are being led by their previous investors, which means that a lot of them are just supporting and backing their investment, right? They don't want it. They don't want to see a 50% down round, even though we will see that. There will be companies at the later stage that will be raising significant down rounds. So I'm curious, what is the domestic investor not seeing, and what is the feedback that you're hearing when approached by a company like this, where they're saying, "Hey, we're not. This is not us."
Yeah. So the domestic investors again just have been burned by prior investments. They're being a lot more judicious in terms of what companies they're backing. They will continue. They will back those who are best in class. They will back those who are clearly differentiated. They will back those who've hit certain technology milestones, who have certain a very strong existing investor base, right? But for the early stage opportunity, that's a little bit that's beyond seed, and that says, look, we're cash flow positive in 10 years. That's a very, very tough story to sell and for the domestic investor. And again, just mostly because a lot of them have been burned.
Yeah. Leon, you obviously run capital and have a number of LPs. Why are you investing in space? And maybe specifically, when you're talking to an LP who's never heard or doesn't really spend a lot of time in the industry, and they're like, "Hey, Leon, I want you to build our exposure." What is the thesis? What is the vision that you tell them, which makes this hey, you can actually generate an ROI here. This isn't a science project.
Yeah, so I have a very clear vision. When I left JPL 2.5 years ago, I was inside NASA, inside JPL. JPL gets about, you heard Laurie Leshin this morning, $2.5 billion a year to put landers on Mars, helicopters, and so on. And I was actually seeing how much technology is being developed and not commercialized. So my vision for leaving JPL in a very, very friendly way, and I love JPL, was to be on the outside and creating an ecosystem so that IP people, entrepreneurs, not just at JPL, from all over the world, can enter this commercial business of space. So I see a huge opportunity. I see technologies that are not yet tapped in not just JPL and NASA centers, but DOE labs, aerospace, AFRL, and you name it. So there's a lot of, I say, latent energy in terms of commercialization that is just kind of needs a pull into the commercial markets, whether it's sensors and detectors and payloads and software and hardware, just oogles of it. So my thesis is that space is an inevitability. It's not a choice. We are expanding as a society, as humanity. We are going to be permanently on the moon. We are going to explore resources. You heard all of that this morning. And then to even accelerate that vision, the geopolitics and the dual use aspect of space is self-evident. We see it every day in the geopolitics, and some of it is very bad. But being a leader, being a citizen of the world, if you want, a leader for all of humanity, to me is very important. Not just the United States, but being a global leader for good. And there's no better time to do that than now, given what's going on in the world.
Just switching gears for a second to talk about the government side. Tim and Carie, do you feel like there's enough, and this is going back to my initial question, maybe let's talk about let's dig into is there enough funding on the government side, and if not, what's missing on the non-dilutive financing side, right? Companies do have access to SBIRs, and there's AFWERX, and there's tons of different programs that they can go after. Maybe talk a little bit about, is that enough? Is there things that the government could be doing more of, or in terms of programming? And then related to that, maybe talk a little bit about how should companies best position themselves right now where funding is starting to get a little scarce based on what we're saying here on the later stage. Like what could companies be doing to like really position themselves for those programs? I talked to a few startups yesterday, and basically it's funny, the SIBRs came up and they were like, look, it's not as easy as it was before, right? You know, there's a lot more competition, there's a lot more companies going after the same pool of capital.
Yeah, so I think that, you know, at the end of the day, there is more funding for early stage, you know, just like with the rest of the capital formation. But that's unique to the space sector. You look at land, air, and sea, there are dozens of government agencies that are providing funding to support the infrastructure development of that. You don't have a scientific organization in the military doing 95+% of the funding of that. You've got Department of Commerce, Transportation, and the list goes on, providing hundreds of billions of dollars a year in infrastructure funding, non-dilutive capital. But space, we're trusting that to rocket scientists and armed services. So it's weird. So no, I don't think there's enough because, as Leanne pointed out, this is inevitable. People are going, like it or not. We're going there. We need the infrastructure. Government's role is buying down some of that risk.
Sorry.
It's okay. So I think just to go to your last question of like what can companies be doing, and I think it's super important to ask, you know, just a simple question. Like when I see a lot of companies, I will say to them, why can't SpaceX do this? Or why won't SpaceX do this? And a lot of founders don't have a good answer. Well, you're not going to get fun unless you can answer that question. So there are some fundamental things that need to be done in terms of the story and in terms of the vision. I think from the government perspective, so I actually, I'm playing hooky right now. I'm supposed to be in another meeting in the state of Colorado, which is where I live. And the state of Colorado has grants for advanced industries. So please don't tell them. I told them something came up. But you know, there are things that even local and state governments are doing to be able to provide non-dilutive funding, which is fantastic. And I think the government really is shifting. And I love what we heard 2 sessions ago about having government employees go into industry and vice versa, because I think that mutual understanding of the flow is so important, because quite frankly, all of the entrepreneurs out there know that things have to move fast. And anyone who's lived or worked in DC knows that is the exact opposite of how the government is set up to be run. So those things are shifting, and I think we have to be able to facilitate that shift.
Yeah, so what I was going to add, you asked for what can be done differently. So when you look at the SBIR program from the SBA, it is a multi-billion-dollar seed investment in the U.S. economy. In my opinion, a few changes that can be made is, and having been on the inside at JPL, to me, the SBA and the grants that are issued, to me, are not strategic enough. You have many companies that are living off SBIRs for many, many years. Phase 1, Phase 2, Phase 1, Phase 1, and that is the only thing that's sustaining that company. To me, that should be cut off within 2 or 3 years, that's it. And so, in other words, the SBA and this whole program needs to be more entrepreneurial, more business-like, partnering with capital, private capital, with seed-level funds. If they don't have that, well, you don't get it. So there could be much more of a business approach to how this money is invested, much like In-Q-Tel does and others. Yep. SBIRs are in many cases almost like a kind of entitlement to some companies that are just living off of the SBIRs, and I think that should end.
Can I throw in just
Please.
something else we haven't discussed, and what Mike brought up too, is when you have this foreign investment coming in, from a national and homeland security perspective, it can be very concerning. And that could be a whole nother topic, but I just would feel amiss if we didn't bring that up, because I think it matters a lot.
Well, it matters, and there's a number of companies that are raising capital today that went through the, you know, we can look up pretty easily, I won't name names, but went through CFIUS investigations because of foreign ownership, almost killed the company.
Yep.
Right, and you know, some of them have survived. So I do want to say, so one thing you brought up, which is interesting, is on the point on SpaceX, like what are you doing differently? It actually, it's interesting. If you actually go down the list of the top 10 holders of SpaceX, any of those funds or those sovereign wealth funds or pension plans, and you ask them if they have any interest in making any other space investments, they're going to say no, actually. because they're like, we don't think anyone can compete with them, and we've made our space investment, and they're going to be the monopoly. Now, right or wrong, it is an interesting dynamic that exists out there. The biggest holders of SpaceX don't want to invest in anything else because they think that they're going to be the monster in the room. So anyway, kind of with that, I do actually have a separate question going back. Leon, maybe we can start with you. So one of the biggest things, if you look at SpaceX, arguably the most successful space investment of all time so far, right? From seed to where it is today. I think if you actually count, when Founders Fund first invested in the company till today, I think the net IRR on that is like 40% or something, like really good, right? Now, but SpaceX has been private for 20 years, right? So I'm curious, like, how do you think about liquidity? Because if you're running a fund, you have a 10-year cycle. Like, what do you think liquidity looks like? And then I do want to tie it back to the government, because you brought up really something interesting, which is like the government should be thinking about this more as a business, like InQtel is. And I think that there is probably a better place for venture capital to enter into the industry where government doing a lot of the initial kind of like R&D work. I don't know. I don't want to answer your question for you, but I'm kind of curious. How do you think about liquidity?
Many people like to criticize the U.S. government in its ways, and I actually am on the other side. I think in the space business, the United States government, whether it's NASA or the DoD, has done an amazing job in commercializing. And this goes back over a dozen years after the shuttle was retired, and there was commercial crew, commercial cargo, all these programs that SpaceX benefited tremendously. In fact, I interviewed Hans Königsmann from employee number 4 at SpaceX, and I asked him that question, how do you feel about the government investments? And he basically said it was essential. It really, SpaceX cannot be taking all the credit for its dominance. It was strategic for the U.S. government to have a counterbalance to the ULA and other programs. So I think I give credit to NASA and the U.S. government, the DoD, for commercializing space. Now, can it do more? Can it do better? Of course, and it should, but I give it a lot of credit. In terms of the liquidity, frankly, people have been debating that topic who have much more experience than I do in that field, and basically comparing a private company like SpaceX to others that have SPAC'd, to others that have went public, and so on. So I think there's something to be said about the quality of a company that is still privately owned, did not go out, and I'm all for it.
Well, and I think aside from just government providing more cash, there's opportunities to provide backstops. We saw with like Tennessee Valley Authority in the last century, the government wanted infrastructure built. They set up an entity that could backstop loans, provide loan guarantees, credit, and that can help unlock a lot of private capital that will do all the risk and do all the work, just knowing some of that risk is bought down by the government. Much more cost effective than throwing contracts out there.
But I think Leon's point is so important. You may not call the U.S. government an investor in SpaceX, but in terms of cash into the company,
Totally.
And so timing is key, right? I mean, not to denigrate any of the success SpaceX has had, but they were at the right time.
Yep. It's a general question to the group. What are certain like common mistakes that you see made by management teams? And what are the things that you typically, or like what's the biggest piece of advice that you can give to management teams across stage, whether it's seed or late stage, where you feel like they could be doing better, or just generally like, hey, just this is what I see a lot of, don't do this?
So having realistic forecasts. I think we're looking, we saw this, during the SPAC boom. If you look at all their de-SPAC presentations, most, not all, and you compare their forecasts to what they've actually achieved in 21 and 22, and you compare their current forecasts, the forecast a couple years ago, it's completely different, wildly off, right? So investors don't have a short-term memory, right? Like the investor you come to for the Series B, 9 times out of 10, you're probably going to come back to them in the Series C, even if they didn't invest in the Series B. And the first question they're going to ask is, hey, during the Series B, here's where the forecast that you shared with me. Why has it changed? Right? So I think that's a pretty, big mistake I see management teams make, is just being a little too aggressive in terms of the forecast. And so, it does come back to bite you, I think, later on down the line. So, and look, everyone knows it's very tough to forecast, right? It's extremely tough to forecast. But I think, introducing a little bit more discipline into the process can be helpful in the long term.
So I can really kind of answer this question in detail, because I have seen a lot of mistakes. And what I'm kind of upset about is, when you make mistakes or failures that you could have avoided, then that's when you should get upset. When you try new things and daring things and you make a mistake, you fail. It's like the Falcon 1 failed 3 times. You don't regret, you just learn and move on. So what I'm seeing is a lot of those first, where a startup company, and I just start with a few basic questions. If you're going into space, do you have an environmental requirements document? What? If you don't know where you're going and what the environment is and you're building a system, it's a disaster. Then I ask, do you have a quality assurance person? Oh, we're going to do that later. It's a disaster. So going into space is hard, and there's lots of stuff, even a lot of stuff you don't know. But if there are things that you can avoid because there's lots of decades of experience, then it's upon you to reach out, to go on the internet, look at the NASA handbooks, look at this, look at that. There's lots of data, lots of information, and lots of experience out there. If you skip all those steps or some of them, you're just asking for trouble. You may get lucky the first time, but that's no guarantee for the future. So that's kind of what I'm seeing, is that startup companies very often, they rush, they kind of romanticize about an agile approach where you launch, fail, but if there are things you could avoid failing, you should.
Yeah, and I would say the thing I see consistently within the space sector is people want to stay inside the space sector. Everything stays on the inside. We're cool. We talk our own language. But that misses out on the fact that space touches the rest of humanity. And so when you are leading a company and you're just talking to other space companies, you're missing out on huge opportunities to engage with the rest of the world. Axiom going to Prada to design the spacesuit for their station. Great example of this working. I'm in several message threads with groups who are very upset that they went to Prada, because why didn't they go to a space startup? They went to Prada because Prada is who their customers wear. If you're spending millions of dollars a night in a hotel in space, you also own Prada. So go outside. Events like this are perfect.
Close us off, Carie.
So I would say I work with a lot of founders, both in aerospace, deep tech, and beyond, and the same thing happens in all companies. So space is not different than other companies, and so I think I just wanted to put that out there. And because I work with the more early stage, what I tend to see is that founders get so focused on the tech that it's not usually the tech. I like to see, tech isn't what's going to kill your company, it's people. It's always going to come back to management and being able to manage people, and particularly for founders, being able to scale and grow just as much as their company needs to scale and grow. So being able to come from focusing on the tech and working in the business to actually working on the business. And very few people have both skill sets to be able to do that. And I think it's really hard, but when it works, it's amazing.
We'll leave it at that. Thank you, guys. Thank you for being here.
Thank you.
Thank you.